Hello everyone, welcome back. In the previous video, we had analysed GSK. Now, we shall move on to Sanofi. Let's go! Let's start with a snapshot view of where the company currently stands. Again, from Morningstar.com, we can see that the forward PE ratio is 11.89. That's nicely below 15. However, price to book is 1.65 and price to sales is 2.79. I would prefer both figures to be below 1. So, it does look like its PE ratio is fair, usually under 15, but the price compared to its book and sales is a little high. Uncannily so, even GSK had these similar stats. For FY2020, Sanofi made 36 billion euros, 10 billion came from specialty care, 6 billion came from vaccines, 14 billion came from general medicine and 4.3 billion from consumer healthcare. That's a pretty diversified portfolio, I would say. In their Q4 FY2020 results presentations, Sanofi does show that Dupixent is their #1 sales product, which accounts for $1 billion in sales. It's simply an eczema-related medicine. Their vaccines, primarily the influenza shots, show an uptick in sales by breaking the 2 billion sales mark for this financial year. So, in general, Sanofi is a well-diversified group. They have relevant and timely products to sell, and selling vaccines will be a boost to revenue. Alright, now let's run through the financials. Let's start with revenue over the years. Not bad. There is some growth, not drastic, but there. Gross margins have also been impressive for Sanofi, staying above the 65% mark. That's commendable. With positive revenue and good gross margins come good income, or at least I hope. Indeed, net income is squarely above the positive line. And remarkably, there is a huge spike from 2019 to 2020. This would need some investigating, but I think they played some magic during the COVID-19 phase and came out with a winning solution of sorts. Following suit is EPS, and that is doing quite well. Now let's run through free cash flow and lastly debt to equity ratio. In free cash flow, we can see a nice positive line, although it's not growing much at all. Clearly, this is not a Warren Buffett type of stock. Finally, the debt to equity ratio. Here we can see that debt is managed well and the debt to equity ratio sits comfortably under the 0.5 mark. Now that makes me happy. So, in summary, the reason why we are looking at these two companies is because they are in the running to produce 200 million vaccines to help COVAX and get countries vaccinated. How much will this impact the company's bottom line is yet to be seen. I'm sure many analysts and banks have taken up the job to do it and create their own projections. But as a value investor, our concern is mostly with what the company has done for the past 10 years and are they in the position to continue doing it for the next 10 years? Producing the vaccines is just a bonus. With our little summary in this video, it seems that both are well positioned. GSK is a strong global leader with 300 years of history, making profits from well-diversified products. Same story goes for Sanofi. I'll leave it to you to dig deeper and make your own intrinsic value analysis. COVID-19 fatigue seems to be kicking in, right?
It's time to stop, okay? No more!
Tell me about it. I mean really, tell me about it. Write down your comments about COVID-19 below, and before you go, don't forget to hit the like button and the bell icon to subscribe to our channel. Bye everybody!